You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. You wanted it, you got it. A radio program that helps teach you options trading inside and out, basic to complex. This is Options Bootcamp. Whether you want to learn how to protect your portfolio, generate income, or even become a master of volatility, the Options Bootcamp drill instructors will break it all down for you. Now, let's get you into peak options trading shape. Here are your Options Bootcamp drill instructors.
All right, everybody. That music means we are back here for Options Bootcamp, what the cool kids call the old OBC holding court here on Education Wednesday, as we are wont to do. Hopefully you folks are enjoying all this good stuff. If you do enjoy what you hear, feel free to throw some stars our way on whatever platform you're getting it on. Could be iTunes, could be your Spotify's, YouTube. Throw a nice comment, I guess, or a like there if you like to get it there. If you want to get it via our mobile app, just leave some stars or review in the app stores there. All of it helps people discover the content. This like this week's 5-star review coming from InnoFred. InnoFred says, 5 stars. They did 0 DTE. Now would love to see an episode about binaries. We could probably make that happen there, Mr. or perhaps Mrs. InnoFred. If you're listening to the full network, you heard an episode I just did of This Week in Futures Options last week with our buddy Mr. Nick, the creator of Quick Strike, all about the binaries that are going up over there on CME right now. They call them event contracts. They don't call them binaries, but they have 11 of them up there, including most of the major equity indices. They have the metals. They have, I think, one FX. They have nat gas and crude oil and a couple of other, and no ags yet, but most of the major products that trade over there at CME have some sort of binary on them right now. So that's a nice starting point. We, of course, back in the day used to have Nadex on the network a lot. They had some very interesting binary offerings as well. So could be some intriguing stuff there. I am also joined, as always, by my compatriot here, Mr. Dan Passarelli, the black-hatted one from Market Taker Mentoring. Mr. P, what do you say to our buddy, Mr. InnoFred, leaving us 5 stars? And also for his suggestion, what you think we should talk some binaries on the show down the road, sir?
Well, first of all, thank you very, very much for the review. We love that. Gotta love that. Yeah, I mean, hey, man, we'll talk about anything people want us to talk about, won't we? I think binaries are few and far between, it seems like, but I don't know. I mean, you mentioned that they have, let's talk about it. Why not? Why not?
Why not, indeed. So if you have a suggestion, something you want us to talk about, probably don't leave it in the reviews of your app stores. We don't get to these as frequently. Hit us up on most of the major social media platforms. At Options is the place you can find us. Of course, questions at theoptionsinsider.com also works. If you're on the pro side, you're joining us live, you all get bumped up. I see you folks chatting about 0 day there in the live chat right now. Of course, you want to join the pro for yourselves, theoptionsinsider.com/pro. Coming up on the giveaway for the May Pro Trading Crate. Of course, exclusive shows like Pro Q&As, as well as Options Oddities, early access to great pro content, and really exclusive content, stuff like the Options Industry Conference panels coming at you first on the pro side before they hit the main network. And, of course, live access to this and everything else we do here on the show. So if you want to heckle Dan live, that's the place to do it. But I think that's an intriguing suggestion, binaries. I think there's a lot to unpack there. I used to like the way the Nadex folks did theirs, 0 to 100. It's a very intuitive way to price an option. If you think something has a 55% probability of expiring in the money, then it's probably trading around 55. It's very intuitive for people. The CME does it a little differently. They go 0 to 20. So you have to kind of do the 5x multiplier. It's a little bit less intuitive. I like it a little bit less, but it's on an exchange most of you have heard of. So that's a bonus out there. So that could be a fun episode topic. I'm down for that, Mr. P. Speaking of Mr. P, we got so hot and bothered about income last week that we buried the lead. Don't want to do that this week. So, Mr. P, sir, people have been waiting for 2 weeks now to get their taste of it. What do you got in store for them? Your much anticipated market taker question of the week.
Yes. Well, I get asked this occasionally, but on a regular basis, people will ask, Dan, how do I go about finding stocks to trade options on? Like how do I find them? How do I get the initial trade ideas? And, that is one of the challenges. I used to just like flip through charts and like hunt and look for them. But I found that that's a pretty not time efficient way to go about it.
You just search for if they have AI and then you buy them. That's it.
Yeah, that would have worked for the past month or so, wouldn't it? But, like I've become a really, really big fan of scanners. And the thing with scanners is they can do certain things and they can't do other certain things at this point, although, AI might end up changing that a bit going into the future here, probably not too distant future. But, I set up some proprietary scans, and you don't necessarily have to use proprietary scans. Some of the stuff you can just use your brokerage platform with. And you run a scan for a thing that is maybe part of your trading system. And then you get a list of candidates to run it through some other filters. Like, for example, most of the scans that I use nowadays are my proprietary scans that have a whole bunch of stuff baked into them. So I'm going to have to just make one up on the fly here. Like you could go and look for stocks that are optionable, have at least 2,500 open interest on the options, and are within 2% of their annual high. And then, okay, you've got this list of stocks that are, you can trade options are. The options are probably pretty liquid. They're near their annual high, but what does that really tell you? And so you might use some other filter to manually, like RSI or something, to see if they're overbought or if there's still potentially room to run. And not having the technology or programming skills, or just not having purchased out of the box some of this these proprietary scanners, that's a pretty good way to go about it. Really, what scanners do is they limit. They don't give you ideas. They take away bad ideas, right? They limit the universe of potential trades from hundreds of thousands down to, much fewer, tens of potential trades. And then, I always manually screen them after that with some sort of cross screen, and then you can usually whip up a pretty decent trade.
We can usually whip up a pretty interesting options drills, so let's get to it.
Well, in boots, time for our favorite pastime, option drills. We're going to take the strategies learned during the show and teach you how they can be employed to achieve a specific objective. Do you hear me? Yes, sir!
All right, everybody, welcome to Options Drills, a portion of the show we explore and explain how you can utilize a lot of the strategies and tactics we discuss here on the show in specific scenarios and situations. And Dan, I was kind of joking before about just buy NVIDIA, but it does seem like everyone and their mother is obsessed with AI. So I think we are legally obligated to discuss it on the show today. What do you think, sir?
I think we got to do it. We got to.
We got to. All right, let's do it. Let's dive right on into AI. Everyone wants to ride the AI wave now. So we're going to explore how to do that using options right now. Now, this AI thing, NVIDIA's got everyone all hot and bothered by it, but it's not new, obviously. In fact, for the last few months on the network, we've been talking about it a lot. It does seem like this most recent wave really kicked off in earnest with all this Chat GPT and OpenAI stuff going on, mostly with Microsoft. They really kind of got that ball rolling back earlier this year. Google picking up that ball and running with it as a result of their Bard. The stock actually took a big hit early on when their Bard demo failed. People didn't like the results they were getting from Bard. The stock actually took a pretty big hit. Obviously, they've been rallying ever since. It's been intriguing. I used to joke on our network when we do shows like the Option Block. It's a pretty sleepy day when Alphabet stock is making our most active list. These days, if Alphabet and even, just the old Googs and Googles, so Class A and Class C are making it onto the list, then I'd be surprised if they don't make it these days. They're just trading it up. It's just the last few months, this whole AI wave has reshaped everything. And of course, in the last couple of weeks, NVIDIA kicking everything into higher gear. We were joking on the network, Dan, not too long ago, a couple of weeks ago, who would even think of buying NVIDIA now? It was close to a 200 PE at the time, right around 190. It just seemed like a ludicrous prospect. And then, of course, fast forward to their earnings last week, listeners, and they were pricing in about 6.6%. They went into their announcement right around $305, already a very lofty valuation. A lot of people made headlines. Cathie Wood, a lot of other firms and funds had already dumped their position. They had made a good run already for the year on NVIDIA. And again, they were pricing in 6.6%. It seemed like a decent amount at the time, but obviously in hindsight, not enough because they moved exactly 25% after their announcement, listeners. They closed, or they were trading at the time we ran the numbers, right around almost 382 as a result. So a huge outperformance. So in that scenario, the most obvious and basic approach would have worked, obviously, right? Buy some premium, buy a call, let the dice fly. In that case, you were buying about a 6.6% move. You ended up getting a 25% move. That's a huge outperformance. Trust me, we've been crunching this data for a long time on earnings volatility. You don't see that very often. In fact, NVIDIA is topping our list right now in terms of movers versus how much was implied, just the dramatic outperformance on our earnings move results chart. I don't think anything else is even touching it out there right now. So that's a pretty dramatic scenario. You're not going to see that too often. So coming in and just buying that out of the money or even at the money call and letting the dice fly, that's going to be a very difficult approach to take right now. Let's go back to that name. Let's go back to NVIDIA right now. Let's say you don't think the bloom is off the rose. You think NVIDIA is going to rally hard. We crunched the numbers right before showtime. NVIDIA was hanging out at around 400. I think it has sold off a bit now, so it's coming off a little bit right now. Again, understandable. This thing can't just shoot up every day. Most days, maybe, not every day. So coming into the start of the show, you could have bought that NVIDIA just 1 month out, not even going that far out. That NVIDIA 400 level call, so you have the money call. It was close to $20, about $19 for that. So you're pricing in a fair amount of juice. Obviously, that's got a pretty huge break-even move. You need it to move to 419 just to break even. So in that scenario, probably not the approach we would advocate here. And again, we're big fans of spreads here on this network anyway. So you're looking at a name like NVIDIA. The volatility is obviously getting bid up now. So unlike a lot of the names we're talking about, your Apples, your Microsoft, we're hanging out close to 52-week lows from a volatility perspective. NVIDIA is getting juicy for obvious reasons. It moved 25% overnight. It's going to drive some vol. And also, it's kind of getting a little bit of a whiff of 2021 about it again, where just a meme stock palooza again, where everyone wants to call. So the call wing is getting bid up as well. So in those environments, you might want to think about spreads just as a way to have a short premium leg against it. You want to be able to sell some of this very inflated call premium in this case, because it's going to make your overall trade cheaper and improve your overall payout potential. So just basic spreads we're looking at here right now, listeners. For example, that 425 call, we said the 400 call was trading close to $20. 425 call trading almost $10 right now. So you could do that 400, 425 vertical, do it for about $9. That's still kind of juicy. If you go a little bit farther out of the money, you think this thing's got some room to run, you could do that 425, 450 vertical. Right now, the 450 call trading right about $5. So it lines up very nicely, actually. You could buy that vertical for about $5. give you a potential 5x banger on your capital and also reducing your outlay substantially. So pros of that, obviously, a lot cheaper, reducing your overall risk. The downside, you're obviously clipping your upside, but you can still make 5x on your trade if that was your outlook there. So intriguing stuff. Dan, before I go with some other examples, I'm sure people are just deluging you over there at MTM right now saying, Mr. P, all the British children again, Mr. Passarelli, how can I ride this AI wave using options, sir? So what do you tell those poor British children looking to trade AI, sir?
So, yeah, I was looking at this the other day, yesterday, as a matter of fact, and you kind of have a couple of choices. Choice one is to do exactly what you were just saying and look at either buying calls or buying call spreads. And, both are good in their own right. Buying calls, it does appear that you'll be buying overpriced premium, but we find out for sure if it's overpriced afterwards, right? You get another one of these big gigantic moves in NVIDIA. I mean, their historical volatility, it jumped up as a result of that move, but it's still climbing higher, given some volatility follow through. So that's one thing you can do, exactly what you just described. But another thing is looking at straddles. Now, I'm pretty sure that this whole AI thing is not just a flash in the pan. I think the world is changing. It's sort of a black swan event, if you will, although that's kind of a weird thing to call it. I think a black swan event is just like, random surprise thing. This has all been in the works for a long time. It's just now, the cat's out of the bag now. So I think the AI thing is going to go on for a long, long time, but we'll have some volatility going into it. And so in some of the names where the implied volatility is not that high, which is pretty hard to measure, but I was looking at NVIDIA yesterday, and you could have bought the at the money straddle for like $29 or something. And the thing has moved about $20 since I looked at it. Full disclosure, I chose not to buy it, unfortunately. But, because I'm just wondering if we might end up in a range here in NVIDIA. But that's the thing. I wouldn't be taking any short delta plays. I would definitely be taking some long delta plays, and then I would be taking some volatility plays as the story continues to unfold. Right now, leaning towards straddles. If it looks like some of these stocks like NVIDIA found their level, then selling some of that super rich premium and taking advantage of that with some really wide-winged iron condors or time spreads or something.
We're talking about long straddles, that things are moving. The last time you and I were talking about long straddles, Dan, I believe it was early 2021. What could have been happening then, sir? I was bullish on straddles for that entire year, man. Yeah, those are rare times when we're actually fans of long straddles because they're actually working. And you could argue, as Dan just did, that they are working right now in NVIDIA. Again, that's a rarefied time when you can just come in and load up on a straddle because the vol is underpriced. But you could certainly argue with the movements we're getting in NVIDIA right now, it is a bit underpriced. So that's one way you could certainly go as well. The long straddle, today's move is mostly paid off, pretty close to it. But again, I would be very reticent to recommend that for the audience of this program because you have to really be quick on the trigger finger with the long straddles. As we said many times, that's going to decay. If you don't get that move fairly quickly, as Dan mentioned, maybe we do settle into a little bit of a range here for NVIDIA. Now that straddle is going to come crashing back to earth. And if you're left holding that bag, remember you're long two at the money options are going to decay faster than anything else on the board. So you got two of them in your back pocket now. So you're paying a little bit of theta for that. So if you're going to do that, it's not a set it and forget it trade. You have to be willing to babysit it. Hopefully you got time during the day. Maybe you drop down. You're able to unload the put side of that, and maybe NVIDIA turns around and rallies again. You're able to unload the call. You make money on both legs. That'd be a nice ideal scenario. But you have to be quick on the trigger finger and willing to babysit it if you are going to do that. Other ways to go, if you're a little bit on the braver side here, for example, we talked about buying the upside. And again, I'm going to break down some of these prices of this skew. That's also going to show you where the bias is in NVIDIA right now. It is clearly to the upside. Usually, listeners, the puts have a premium versus the calls from an implied volatility perspective in most equities. But when things get a little bit out of whack, like they did in 2021, or they are right now in NVIDIA, upside is where the premium is. Like, for example, you could sell that 387.5 put, so $12.5 out of the money. In our example, 1 month out, you can get about $11 for that. And then you could turn around and you can't just buy the same $12.5 out of the money call and get that for even money. No, you have to go all the way out to the 425 call. That shows you how much premium there is baked into that upside calling right now. If you did that, if you sold that 387.5 put and you bought the 425 call, you could actually do that for a $1 credit. Again, this was lining up coming into the show. Things are going to be moving, so not always going to line up that same way. But that shows you, A, how much of a bias there is to the upside right now, and how tight you have to get with the put in order to get yourself a call with close to even money. I know a lot of you like the zero net outlay type trades, or in this case, a credit. But obviously, the pro to that, there's no debit for that. It's a credit. The download, you're on the hook for an NVIDIA stock below 387.5. So you better love yourself some NVIDIA if you're going to look at that strategy. But if you want to get lower cost swing for the upside fences, you think this is all upside all the time, that's one way you could go. I would probably caution you to probably come in and put spread against that to the downside. It's going to obviously limit your amount of premium you're collecting. You probably have to pay a debit for that spread, but safer, you can sleep at night at the end of the day. You could also turn around and do a put spread in our example. So a 387.5, let's go to 375. We'll make it some nice round numbers. You could sell that put spread in NVIDIA for about a $4 credit. So not bad. Again, you're taking some risk there, $12.5 worth of risk for a $4 credit. But you could turn around and now buy, let's say you're really bullish on NVIDIA. You can buy a bullish vertical. So you can effectively lend into a bit of a bullish risk reversal there, listeners. You can buy that June 425, 450 vertical. Still got to pay for that because the upside is where the action is. We got to pay a $5 debit to do that. So there's a $5 debit for that vertical. You sell the put spread, collect $4, pay $5 for the vertical. You net spending $1. So your net outlay is a little bit more manageable here, and you're getting a lot of upside this. The downside, of course, you're on the hook for $12.5 worth of downside for NVIDIA. Other things you could consider right now, if you are fortunate enough to have been riding this crazy wave of NVIDIA up on the underlying, might be time to take some of that off the table. You could turn around. If you still want to keep playing, you still want to keep your table stakes, but also take a lot of your risk off the table, then old school stock substitution is a great strategy for that. In our example, if you just went 1 month out, and you're probably going to do stock substitution, you probably want to go a little bit farther out. In our example, we're just looking at the front month here. You could sell your stock, obviously, at $400, buy that 400 call 1 month out for about $19. You can see the obvious benefit of that. You're taking most of your risk off the table. You're only left holding the bag for $19. If NVIDIA stays here or drops, you're only out $19. So that's attractive for those of you who are sitting on your own private islands right now as a result of owning NVIDIA. So I tip my cap to you out there. Also, as you mentioned, this call wing is extremely juicy. So any spreads that allow you to sell that upside, kind of attractive. Let's say a nice butterfly right now. We looked at a very straight symmetrical butterfly, the 400, so the par, 425, 450. If you know me, you know this show, I like to do a little bit more skip strike / broken wing flies, but some people like symmetrical flies as well. 400, 425, 450 butterfly. That was about a $4 debit. So you can come out, buy that. Your outlay now only $4, so it's a lot better than close to $20 for buying that call outright. Obviously, your max profit on a spread like that is going to be $25, so $19 once you take out what you paid for it. We talked about butterflies before. The stock's whipping around, so it's not a good chance that it's going to be closing exactly at that 425 strike where you want it. But if you like a more risk-mitigated way to approach some of the upside, that could be the way to go. Of course, if the stock explodes to the upside, you're not going to get that juicy return you're looking for there. Another way to go, maybe you think NVIDIA's already had its run, or maybe it's just too rich for your blood. There are other names people are slinging out there that may be a little bit cheaper, a little bit less likely for you to get run over. Names like Palantir have been very popular right now. For example, Palantir coming into the start of the show was trading right around $14.50. So some people are looking at pricing up. If you want to do, let's say, a symmetrical fly, 14.5, 15.5, 16.5, you can do that for about 20 cents. Up to you if you think that's a good trade or not right there. But at least Palantir, the $400 level, that could be just too rich for a lot of you out there. Palantir. You could argue whether it's as good of an AI stock or not. I'll leave that up to you folks in the comments and out there on Twitter. But attractive, maybe just from a lower premium perspective, still letting you have some skin in the game. Some strategies you may want to avoid in these names right now, along calendars. You don't really want to go out, buy longer term premium and sell front month premium in these names because they're whipping around. Calendar spreads are good for names where you think they're going to sit there for a while. If you think NVIDIA's done, going to sit right here, you can maybe consider that. I think you're probably crazy, but hey, I would put that in my list of trades to avoid. Also, a lot of aggressive, just straight outright premium sales, just selling the 400 puts in NVIDIA right now, or even the short straddle right now. That's a difficult and a very dangerous road to go down. Same thing with naked net units to the upside. You don't want to be net short units to the upside in NVIDIA right now. As tempting as it might be to, let's say, buy one and sell two and let the top upside just fly, that's a road to potential ruin. We've seen how these names can outperform. It just did it a couple of weeks ago. You don't want to be caught on the wrong side of that. So straight outright premium without a spread against it. Short, you don't kind of want to avoid that. Also avoid just naked net short units, especially to the upside out there in NVIDIA and names like this right now. Mr. Dan, do you concur with those strategies to avoid? And anything else you want to add on either the avoid side or the potentially things to consider side, sir?
I mean, I think it's important to have an open mind, but yeah, you definitely don't want to be short units especially to the upside. But I find Palantir interesting. I actually bought them as an investment a long time ago and have been underwater. And, the Peter Thiel, who's one of the founders of that, or the founder, I think he's one of the founders, weird dude, but he is freaking smart. And so it's hard to bet against that guy.
Very weird dude. If you want to read some interesting stuff, look up how he used his IRA to pretty much shield all of his Palantir profits from taxes. It's interesting and or outrageous, depending on your viewpoint out there, but intriguing stuff. And you're right. We've been trading Palantir a bit back and forth in our Options Oddities show. And I was selling some downside puts in that for a while ago. And I got run over to the downside as well, where you're almost wearing it on puts in like the 10, I think 9, and even 8 strikes out there for a while. Of course, this recent rally outdoing some of that. So intriguing stuff. Palantir and intriguing. I don't think we're done with that one either. Before we get out of here, you guys have some questions. Well, let's just get to them right now because we're kind of running up against it. Go to this question from Fullen, or maybe Full On, because it dovetails nicely with what we're talking about here. He or she wants to know, is there an AI ETF that I can trade options on? And the answer is kind of yes, kind of no. If you want your straight up AI-centric ETFs, there's a bunch of them out there. People are going to try to slap AI and everything now and try to market it to you. So be cautious with how you tread. There's a bunch of them out there. There's the AI and Quantum ETF, ticker symbol QTUM. Easy for me to before you dive into that one, the ADV on that is 2 contracts a day. So not slinging a lot of options paper out there. Same thing with the iShares Robotics and Artificial Intelligence ETF, ticker symbol IRBO, IRBO. It's got a little bit better ADV of a whopping 9 contracts a day. You can also go levered, because why wouldn't you want to be levered in AI? The UBOT 2X Daily Robotics AI and Automation Index, that's got an ADV of a whopping 15. So then, of course, there's stuff like ARK and stuff like if you really want to go down that route. I think for my personal taste, I'd be more comfortable and more intrigued going a more quote-unquote direct play. We just talked about NVIDIA. We just talked about Palantir. There are others out there, Microsoft, Google. You can pick who you think the winner is going to be in this AI arms race and wager accordingly. The downside of those, obviously, is they have other businesses that could distort the overall AI impact on the returns and on the share price. But that's the way I would prefer to go. Dan, you have anything you want to add for Mr. or Mrs. Full On? They want to trade options on AI ETFs?
Yeah, I mean, keep an eye out for liquidity, because if there are options with an ADV of 2 contracts or 9 contracts or 15 contracts, chances are the bid-ask spreads are going to be really, really wide. And if they're not, they're probably wider than they look. If you are going in there to try and sell 10, you probably get 1 off at the bid, and the rest at a much worse price. So, that's the main thing. And then with any ETF too, take a pretty good look at it. I mean, something like that, it's going to be stocks. It's not going to be something weird like USO or something like that. But, you know, like Mark said, they're probably slapping AI on everything. I mean, make sure that they're actually AI stocks. You know, make sure that the basket you're investing in or trading in is what you think it is, not just what the name sounds like it is.
All right, that music means we come to the end of another interesting journey, this time through the world of AI. To summarize, listeners, if you think this move is not done, then long premium, long volatility can pay. Look at NVIDIA. It is moving quite a bit. So this is one of the rare scenarios where it can pay to be long premium, long a straddle, whatever your poison of choice is out there. Just be careful. I definitely advocate more having something else against it, some sort of spread leg to mitigate your outlay. Remember, at the end of the day, when you're buying premium, your risk is how much you're paying. So you want to try to reduce that and still maintain some sort of potential for profit. So potentially verticals, flies where you're selling to the upside can be attractive in this environment. Remember, play with those strikes a little bit to give yourself some max benefit without having to worry about that fly having to settle exactly where you need it to be out there. If you're going to avoid strategies like naked short units potentially to the upside, if you're going to sell puts, you're not getting a lot of bang for it right now in NVIDIA. The bid is to the upside, so be very judicious out there. We gave some examples of bullish risk reversals. I would be cautious about doing those. If I did, I would definitely have the put spread in place to protect myself against this thing just potentially falling out of bed back to 200. It could happen, in which case you'd be wiped out in a spread like that. And of course, if you want a little bit cheaper plays, there are ones out there like Palantir and others, or maybe other names you're more comfortable with. Could be Microsoft, could be Google. Pick your poison out there. I would stay away from a lot of these quote-unquote AI ETFs. As you mentioned, most of these are roach motels. You're going to get in, you're never going to get out. You are going to be the liquidity in these names. So don't trade these 2, 9, 15 ADV products. Stay with things that actually have some liquidity to them. You will be happier at the end of the day. And also write into us. I'm curious, what names are you looking at to ride this AI wave? Maybe it's the ones we talked about. Maybe there's some lesser heralded ones out there you like. How are you doing it in terms of your option strategies? Are you just straight buying premium, long straddles, long calls? Is it something else out there, a little bit more nuanced? I'm curious. Hit us up. Let us know. Again, it's not going to be the last time we talk about AI here on the show. So we'll probably come back to this topic with some more interesting insights and discussions down the road. But that's going to do it for this episode, Mr. Dam. And before we go, if folks want to hit you up, say, please, sir, I would like to talk about AI with you. Where should they go? What should they do?
Oh, we love talking about that kind of stuff. Come on over to markettaker.com, 2 T's in a row. And hit us up. The chat room is free for the time being. And we'd love to hear from you. Love to hear what your thoughts are. Love to see how we can help.
There you go. Check them out, markettaker.com. Don't forget the second T for Theta out there. And then, of course, we'll be back. Same bat time, same bat channel next week. Another episode of Options Bootcamp. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.